Amazing. Good evening, everyone. I'd like to welcome returning members and new members and members of the public watching at home to this Finance Audit and Risk Committee. This committee plays an important role in the overall governance of the Council. Good governance has many benefits, including helping the Council to make effective decisions, improve performance, and to be able to respond to risks and opportunities. Before we begin, can I invite the committee member and scrutiny officer to explain how proceedings will work and confirm that officers in attendance are present, please?
Thank you, Chair. So before we begin, can we just confirm the following officers can hear us and we can hear them? Salma Yunus.
Hi, good evening.
Great, thanks, Salma. And Anna Lord.
Hi, everyone. Yes, I can hear.
Great, thank you both. So if a member wishes to speak, they should use the speak button located on your microphone unit. The microphone will turn green. When the chair invites you to speak, you will be invited to speak, and your microphone will be made live and will turn red. When requested to vote, voting will be via the yes, no, abstain buttons on your microphone unit. Details of how members voted will be shown on the screens around the room, and the result will be visible on the YouTube stream. In the event of a tied vote, the chair will have the casting vote. Are there any questions before we start the meeting? Nope. Back to you then, Chair.
Brilliant. Thanks, James. Item 1 then, apologies for absence. I've received apologies for absence from Councillors Stuart Willoughby and Stephen Patmore. Having given notice, Councillor Elizabeth Dennis will be substituting for Councillor Stuart Willoughby, and I don't think there will be any other apologies. That's the full committee. Brilliant. Item 2, the minutes from our last meeting, which was on the 25th of March 2026. Can I propose that we take those as read and approve them as a true record of the meeting held on the 25th of March 2026? Could I get a seconder for that, please? Thank you, Councillor Lucas. Sarah Lucas, I suppose I should say, to be clear, since we have two Councillor Lucases now on committee. Any comments on the minutes from any of the committee members? I thought they were pretty accurate. In which case, can I just take those as accurate and read? Don't need to vote on those. Yeah, brilliant. Thank you so much. Item 3, notification of other business. No other business has been notified. So item 4, Chair's announcements. In accordance with Council policy, this meeting is being recorded and the recording will be available to view on ModGov or via the North Arts District Council YouTube channel. Members are reminded to please make declarations of interest before an item. Detailed reminder about this and speaking rights is set out under Chair's announcements on the agenda. And for the purpose of clarification, section 4.8.23, subsection A of the Constitution does not apply to this meeting. So a member can leave the room during the debate and consideration of that item, and you will still be able to vote. As always, if you are planning to do that, just be mindful of making an exit during an appropriate moment in the proceedings. Item 5, public participation. We have none this evening, which brings us straight to item 6, which is the external audit plan and strategy for 25-26, and we have Salma Yunus from KPMG to present.
Hi, thank you, Chair. Hello, everyone. So we've got our external audit plan here that I'll be presenting to you. There were two main bits of this document that I wanted to cover. The first element is around rebuilding assurance, and then the second one is around the audit risks that we've identified for the audit for the year ended 31st of March 2026. So if I just take you to page 19 of the pack, page 3 of our report, which is the section on rebuilding assurance. So I thought I'd start on this because this kind of just sets the scene in terms of the history of the disclaimed audit opinion. Hopefully you're familiar with, there was a backlog of audits in the local government sector going back a number of years. And then the government in 2024 kind of introduced some new measures to make sure that that legacy of kind of that backlog could be addressed. And that meant that there was a cut-off date in terms of December 2024, whereby any audits up to the 31st of March 2023 either needed to be completed or disclaimed. So as a result of that, the District Council did end up with a disclaimed audit for the financial year ended 31st of March 23, and then also for 23-24. And then we've then completed the audit for 24-25 But because of the disclaimer in the previous periods, the 24-25 audit was also disclaimed because we didn't have the audit evidence for the opening, like the prior year audit balances, for example. So guidance has been developed to support us now in terms of building back that assurance, and hence that terminology in terms of rebuilding assurance. And that means in terms of looking at the disclaimed audit periods, and determining if there's any risks, material risks of misstatement in that disclaim period, and then for us as the auditors to perform work on those. So as you'll see on page 3 under the heading of the 25-26 audit, so what we're doing as part of the year-end audit for 31st of March 26 is rebuilding some of that assurance alongside the actual main audit as well. So the risk assessment procedures are still ongoing. We need to report these by the end of July to the MHCLG because they are quite keen that they get sight of, which entities will be able to rebuild that assurance and then work towards the clean audit opinion in a couple of years. And those entities where there still might be some underlying issues that then need to be addressed. So some of the risk assessment procedures that we're undertaking at the moment are around kind of inquiries with management around, relating to the disclaim period, any changes that the authority made around, for example, financial reporting. We'll be reviewing those accounts for those disclaim periods, the annual governance statements as well. And then the main focus will be around looking at the reserve movements during that disclaimed period in terms of not just the reserve movements at each year end, but also during the year as well in terms of the governance process that was followed by the council to kind of review and approve some of those reserves movements as well. So we are completing that risk assessment at the moment. The intention is that we then report to you separately in a separate report the output of that risk assessment. And the output of that risk assessment will be that we'll then identify areas where we think there could potentially be a risk of material misstatement. And then we'll design audit procedures to carry out on those areas. And then we will then report back to you in terms of the output of that work as well. And then we'll have a timeline in terms of when we think the impact, for example, of that on the 25-26 audit report, and then also rebuilding some of that assurance as well. So I just wanted to kind of mention that at the start, just to bring members kind of up to speed with that rebuilding assurance, because that is some terminology that you're going to hear quite regularly from the reports that we present at future meetings as well. I'll pause there if there's any questions on that before I start on the audit risks for the 25-26 audit.
Thank you, Salma, and thank you for outlining some of that background to the plan that we're considering here. Does anyone have any questions specifically on the comments that Salma's just put forward so far? Councillor Brown.
Yes, thank you very much for that explanation. Rebuilding assurance is good to hear. I just wondered, and maybe you can't answer this question, but the 26-27 audit, is that likely to not have a disclaimer any longer?
So potentially. So for some entities, other councils, we have been able to remove that disclaimer for 25-26 as well. So you're right, at this moment in time, I can't say for definite, but that's what we're doing as part of this rebuilding assurance work, to kind of identify what those areas that we need to focus on and then perform some of that work so that it will then enable us to look ahead for 26-27, and then we might be in a position to say, well, actually, we've been able to complete the audit for 25-26. We've done all the rebuilding assurance work on the prior year periods, and so it does enable us to then give a clean opinion, because we've then got the reliance on the current year balances for 26-27, but then also the prior year period balances for 25-26.
Thank you. That's really good to hear.
Are there any other questions from the committee on just the rebuilding assurance elements? No, not at this stage. Just one from me, Salma, please. On page 21, and you might have gone on to cover this in a sec, so I might be jumping the gun a little. You've indicated the deliverable dates, and you're hoping to be able to provide that report to this committee by January 27. Is there anything that's potentially going to influence your inability to do that and meet that deadline?
So I suppose that timeline that you're referring to, Chair, is more the actual audit for the 25-26 rather than the rebuilding assurance bit. We're hoping to kind of do some of that rebuilding assurance work earlier. So, for example, the risk assessment work, when we need to report, it's a deadline set by MHCLG by the end of July. So hopefully you will then see an output from that into the risk assessment. And then we'd like to start then the substantive work alongside the 25-26 audit. I suppose that the main kind of, not necessarily barrier, but I suppose the main thing will just be about balancing, obviously, management's, they've got the day job as well, they're supporting us on the 25-26 audit, but then also there'll be some additional requirements that we'll need as part of the rebuild assurance work as well. So that'll just be a matter of us discussing that with Ian and his team in terms of the timeline and the timescales that work best for that. But yes, the January 27 deadline is the submission for the 25-26 audited statement of accounts.
Amazing. Thanks for clarifying.
Okay. So if I then now move on to focusing on the 25-26 financial statements audit. So moving on to page 20 of the pack and page 4 of our report. We've set out the materiality thresholds here in terms of the kind of thresholds that we apply when we're planning and performing our audit work. And I just wanted to, for those who are kind of eagle-eyed and kind of keen and maybe comparing it to our audit plan from last year, you might notice that the performance materiality, the middle figure, which is the 1.35 million, that this year that has been set at 75% of the higher value of 1.8 million, whereas in the past we've set it at 65%. So there's a number of factors that we as auditors kind of consider when we're determining the materiality threshold, because then that determines the extent of the work that we do, the kind of issues that we report then back to you as well as those charged with governance. So historically we've set it at 65% for North Herts, because obviously you had the disclaimed prior periods. There was kind of limited historic evidence of audit findings as well. But having completed more or less a full audit for 24-25, and based on the findings from that work, the fact that there were limited audit adjustments, I felt comfortable increasing that 65% to a 75% threshold. Obviously, once we get the draft statement of accounts for 25-26, we do then revisit these materiality thresholds and determine if they're still appropriate or not. And that is something that we can kind of keep doing continuously during the audit as well. But I just wanted to kind of flag that to you, that is a change from prior year. And then on to the following page. So when I talk through the audit risks, we talk about risk assessment, and then we look at work using the work of others as well. So in terms of internal audit, we look at the work that Chris and his team do. We review the reports, obviously, as part of the committee's papers here, and also discussions with internal audit. But we don't rely on their work, so we just use it to inform our risk assessment work. And then for the work that we do around the local government pension scheme, we use our pension specialists, so they're called the KPMG Pension Centre of Excellence. They perform all of the procedures that are set out on that risk slide on page 10 of our report. So that was just a flag kind of other teams that we involve in our audit as well. And then moving on to page 6 of our report, which is page 22 of the pack. So this kind of summarises significant risks that we've identified as part of the audit. So these are a typical kind of risk profile for a district council. So there's nothing in here that I'm kind of saying that is very specific to North Hertfordshire. With any other typical district council, these are the risks that you would find, because it's focusing on the significant estimates, which are around the valuation of land and buildings, the valuation of investment property, and then the valuation of the pensions obligations as well. And then the fourth risk is a mandated audit risks that we have to perform across all audits, and that's around the management override of controls. So the remainder of the kind of document, the slides, then go into each risk in detail in terms of setting out what the rationale is for the risk and their planned procedures as well. I just wanted to focus on 1A and 1B, because this is around the valuation of land and buildings. And there has been a change, as we've set out on these slides, in the code of practice for 25-26 as well. So what we've done previously, we just had one significant risk around land and buildings valuation. But this year, because of the change in this code, we've split the risk between those assets that will be valued in year. So the external valuer will value those and provide an estimate of the valuation. And those that are not going to be valued, but then are going to be subject to an indexation. So we've set out on the next two slides on page 7 and 8 how that risk profile slightly differs between those two categories, and then how our audit procedures are then going to reflect that different risk profile as well. And then obviously once that work's performed, we'll then report in accordance with that as well. So I wanted to kind of bring that out from the risk 1A and 1B. There's no change in risk 2, which is on page 9, which is around the valuation of investment property. And that's a similar approach to the approach that we had in the prior year. On the pensions, which is on page 10, the only change is around there has been a triennial valuation of the fund, of the pension fund. And so that does mean that there will be some change in terms of when the actuary kind of recalculates, they've got a new base now in terms of reviewing that base data and then arriving at their actuarial valuation. And so our specialists will consider that as well. And I suppose in terms of changes in pensions, the majority of, well, a lot of funds are in surplus, and we're not expecting that to change for the immediate future. So again, there's not a heightened risk in that respect, but as with any kind of estimate, the assumptions can vary. And I think that triennial valuation will bring kind of a different element to the valuation for this year. Over the page 11, which is the mandatory management override of controls risk. So again, this is just the mandatory risk. There isn't, as we know on bullet point 3 on the left-hand side, we haven't identified any specific additional risks of management override relating to this audit. So it is just the standard audit work that we are required to do. And then slide 12 is a key one because it focuses on the revenue risk. Now, revenue recognition is a mandatory audit risk that auditors are required to perform on all financial statements audits. But we've set out on this slide how, because of the nature of the authority's income, we feel that that risk is mitigated and it's quite low in terms of revenue recognition. And similarly, as a public sector entity, we then have to look at your expenditure recognition risk as well. And again, when we've looked at the council's kind of financial reporting during the year, we've not identified an incentive, for example, to manipulate that expenditure recognition, as in terms of a pressure to deliver a certain plan for the year. And then I'm just going to skip a couple of pages and take you to the value for money approach. So this is on page 16 and 17. So as well as the audit of the financial statements, we also look at the authorities' arrangements around financial sustainability, governance, and then improving economy efficiency and effectiveness. So at this stage, that work is ongoing. So we haven't reported our risk assessment procedures or outcomes here. But these slides do set out our process that we would follow. And again, that's similar to previous year. There's been no change in approach. And that risk assessment will come to a future meeting of the audit committee. And then finally, we've just got the standard kind of appendices in terms of the audit team, the timeline, the audit fees, and then also a confirmation of independence, because KPMG does do one element of non-audit work for the council, and we just set that out in terms of it's a separate team that does that work, and typically it is the work that a lot of external auditors do for their entities, so it's not non-audit services in the traditional kind of sense. I'll stop there for any comments or questions.
Thanks so much, Salma, for that very detailed walkthrough of the plan. That's really helpful. Questions from the committee? Councillor Chris Lucas is waiting.
Thank you. Thank you very much. Thank you very much indeed for that report. My question is I suppose, a question that looms large on the horizon of a lot of meetings now, and that's the impact of LGR on the audit. Will LGR affect how we audit the council? And will it affect the audit timeline at all? given that conversations are being had across the county, across the country, really, in relation to new arrangements when LGR takes place. So I'm wondering if that will affect the timeline in any way.
Thank you. Not for 25-26, because obviously the council still exists as a statutory organisation as at as at 31st of March 26, and it will also exist as at 31st of March 27. So it will continue to produce statement of accounts. But we do take it on board as part of our value for money assessment, because as you say, it's something that's very topical at the moment. The officers at the authority are having various discussions, with other authorities, regionally, nationally, in terms of what that will look like going forward. And so we do look at that in terms of how actively the authority is participating in those discussions, what that will mean going forward, and just around kind of the governance arrangements and how involved the council is in that. And obviously, as you say, it's the senior manager time is being involved in that as well. So it'll be, in terms of Ian for being able to support us alongside the audit. But I'm sure we can manage that between us. But immediately for 25-26, there isn't an impact on our audit approach per se, but it is something that we are monitoring as part of our work on value for money.
Brilliant. Councillor Ward.
Yeah, thank you, Chair. And thanks, Hannah, for the detailed report. Just a question about the confirmation of independence you mentioned at the end. And I'm not suggesting we need more auditors to audit the external auditors. But what's the nature of the other assurance services, the 32 odd £1,000, just so we understand?
Yes,
What it
it's
is.
on, of course, yes, thank you. On page 23 of our plan, and also page 39 of the pack, there is a bit of description there. So it's the housing benefit grant certification. So this is something that the authority has to submit in terms of getting this statement certified. And it is normally something that you go to your external auditor and ask them to do. And we, it is a separate team that does that. It's not part of our public sector North team. It's part of our assurance and kind of advisory team that perform that work. Yes, it's a very kind of specific kind of procedures are performed in terms of, just a bit of a tick box exercise in terms of you have a number of procedures that you have to perform, and then you just issue the certificate to say that it agrees to the underlying record. So that's the nature of the work.
Okay, but it's not a advisory type function.
No, it's not. No, it's not. No, so that's why we've got that within the on page 23, that fourth column, we kind of put down safeguards applied, because as you know, appreciating, obviously you can say, well, actually, is there a risk that you're going to review it? There's a bit of self-interest in there, but no, the actual work is all management responsibility still remains with the district council, and it's not advising them in terms of it's an actual return that the authority prepares, and then KPMG just check it back to the underlying records and confirm it.
Okay, that's clear. Thank you.
Yeah, thank you. Any other questions from the committee? Don't see any. So the recommendations is for the committee to note the external audit plan and strategy for 25-26. Can I have a proposer for that? Yeah, Councillor Sarah Lucas, and I'll take Councillor Willoughby as seconding that. Debate, if any, on the plan. So it was a very detailed walkthrough of the plan. So a lot of our questions were, and thank you, Sal, for answering some of those prompts that I had from the chair's briefing yesterday as well. Take that everyone's quite happy with the proposals for the plan, and look forward to seeing that report in due course. In which case, let's go to the vote on that, please.
Thank you, Chair. That motion's carried.
Brilliant. Thanks so much. And thanks, Salma, for presenting for us this evening.
Thank you.
Moving on to item 7, agenda item 7. It's the SIAS annual assurance statement and internal audit annual report for 25-26. And we have Chris Wood to present. Chris.
Thank you, Chair. Just waiting for the light to go red. First of all, before I dive into the paper, I thought I'd better welcome the 2 new members and introduce myself as well.
Councillor Chris Lucas, I know from the County Council as the resources portfolio holder. We haven't directly met, but we've been in meetings together. And Councillor Willoughby, who I also happen to know from the County Council. And the reason for that is, as well as being the head of internal audit for North Herts through the Shared Internal Audit Service, which you see on my name card, I'm also the head of internal audit at Hertfordshire County Council. So when I was thinking about how to present this report, I did wonder whether, for the benefit of new members, certainly new members to the Audit Committee, I should say, or the FAR Committee, and other members may benefit too, I thought I'd kind of explain what this report was about, because you've got a 36-page report in front of you, which is the longest one, I promise I'll bring to you. And it's got a number of moving parts in it. So one of the things we do during the course of the year is deliver a plan of work. There'll be 20 or so audits in that plan. And at the end of the year, having largely completed that plan, I have to provide an overall assurance opinion for the council based on that work. And members will note that I've given an overall reasonable assurance. That reasonable assurance then finds its way into the annual governance statement, which is your next agenda item. So it forms quite a key part of your governance structure. One of the other things I have to do in this meeting, a bit like you've just heard with the external auditors, is confirm our independence to you, and also confirm that there's been no sort of limitations on the scope of our work or our resources. I might take this opportunity now, if I might, Ian. One of the recommendations is that this meeting seeks management assurance that there have been no limitations on our scope and resources. And just while I'm on this point, I wonder if you could confirm as such to the meeting.
I'm happy to confirm on behalf of management, we have not placed any undue limitations on the scope of SIAS.
Thank you. So one of the other things this meeting has to do is approve our internal audit charter. And that's the big appendix at the back of this document, which takes up quite a number of the pages. But that's like our constitution that sets out what our rights and responsibilities are, where we get our authority from. And this meeting approving that charter effectively gives us our rights here at North Herts to proceed with our work, and requires the council to cooperate with us in delivering that work. So having done that, one thing I forgot in explaining what this report does. So across a 5-year period, we have to do 4 years of self-assessment against the new global internal audit standards, and indeed against the previous standards, assessing ourselves against those. Now, we've assessed ourselves as generally conforms. There's an appendix in this report which sets out the areas we still think we need to improve on. Generally conforms as one of the 2 positive categories. Fully conforms or fully complies as the top category. And we've not assessed ourselves in that category. Very few services do actually fully comply with the standards. We talked in relation to the external auditors about, the question earlier was auditing the auditors. So in the 5th year of a 5-year cycle, internal audit get audited, essentially. We have our external quality assessment, and the Chartered Institute of Internal Auditors have been procured to do that. I'll be bringing a paper to the next meeting just explaining a little bit more about that. I can either pause there if there are any questions, or pick up on a couple of details.
Are there any questions from the committee? Pending? Wait for the details? Maybe they'll wait for the details on this. And then we'll come back to you.
I'm not sure I'm going to be as detailed as KPMG. However, you'll notice in section 2 just summarizes the outcomes of all the individual audits. The number of recommendations we've made, most of them are actually sort of low and advisory. There's a reiteration of our overall assurance opinion and how we arrived at that opinion. I should point to the fact that the standards require us to outline how we're getting on with implementation of recommendations. At North Harts, the protocol is for us to report on the implementation of high priority recommendations, and there are 2 still outstanding at the end of the year, although we report them as largely implemented. There's 2 sections which follow. I'm not sure, Chair, whether you want me to talk about assurance mapping. We certainly talked about it at the briefing, but I can do so if anyone wants to know what that's about. And there's a section on root cause analysis there, which is something the new internal audit standards require us to report on, or at least they require us to report on the themes arising from our root cause analysis. You will know that you get individual audit reports from us, and as part of our recommendations that we make in there, we try and say what the root cause of that is. I think we've got some more work to do on it, but we have a stab at that. And then I'm required to tell this meeting what the themes arising from all of those findings we've made are. And there's a couple of paragraphs there where I particularly pick up on any themes that have arisen. North Harts is actually no different from anywhere else in experiencing some resourcing and capacity challenges in some services, which then has a small impact on some of the on the control environment and the way some controls and procedures and things are operated. And that's certainly one of the themes arising out of our reports. And as I say, that's not unusual in local government at the moment. Our performance indicators are in section 4. I can just update those ever so slightly. The key one is actually the planned projects, which is number 3. We aim to have 100% of those completed by the time I deliver this report to you. You'll know that the 19th of those 21 came out yesterday evening, if you've seen your inboxes. The Anderson House audit is nearly finished. I've got that in front of me today to review and then issue a draft report on that. And we still have the EV charging audit outstanding, which we're trying to progress with the service. I think in terms of details, that's probably as far as I want to go. And is there any other questions?
I'll come back to the root cause one, but Councillor Wood, you have a question?
Yeah, thanks. Maybe just a clarification of my understanding, which is a positive thing, and a question. So I was just looking at the trend really from the previous year, which is page 52, and I guess my interpretation of it actually seems to be very positive. So compared year on year, we've had this last year no limited assurance audits, and we've had 6 substantial, whereas didn't have before. So I mean, when you look at the profile overall, it seems to be significantly better in terms of the control environment, or at least what you've sampled of the control environment, which is great. So that's maybe just check my understanding is right of that. And then probably my chestnut question, which I tend to ask all the time on this one, is the 2 recommendations that you mentioned that are on page 54. It says largely implemented. What is largely, and what does that really mean in terms of the residual risks around the recommendations that you found, and should we be concerned, or are they you think materially mitigated?
There you go. I've gone red again on the microphone. So dealing with the first question, difficult to compare one year to the next. We do put a comparison there, but the audit plan changes from year to year. Now, you'll notice some consistency. We've carried forward audits on Churchgate, for example, which have run year to year. And some of the other major projects like Leisure Centre decarbonisation is featured from year to year. But a good portion of the plan is actually quite different from last year. So sometimes you've got to be a bit careful just about comparing one year to the next. That said, I think there have been some pretty good outcomes. We have focused on a lot of the council's significant projects and key risks in the delivery plan. As you'd expect, anything in the delivery plan is going to have a lot of assurance wrapped around it. So you'd almost expect to have quite good outcomes, certainly in governance, risk and control terms. You'll notice in those that are like purchasing cards, which is where our high priority recommendation this year came from. That's something perhaps around, well, we do like to ensure we cover that kind of area off so that we're not solely focusing on the biggest risks and the biggest projects. That's partly why when I've written about assurance mapping within this report, we map out all those key projects and all those key risks, where they get their assurance from. And we notice there's very good assurance built around that. There's good governance built around that. So if you have an audit plan focused on that, I think you'll get the good outcomes shown here, which is no bad thing. Just on the 2 high priority recommendations, I know we discussed we certainly discussed these, I think, in our last meeting, but just to reiterate on business continuity planning, that was largely about getting that those procedures and policies approved. It's not that there weren't any in place. I think, as we said last time, they were constantly being tested and updated. And what they needed was to be approved at a moment in time, and then you can still test and update them. You don't have to wait until you're happy with them because it's a moving feast. So get them approved and then do the updates. But in terms of those plans being, as I say, regularly tested and those procedures being tested and rewritten, and they're in place. They just need approving. The Cybersecurity Board just needs to approve them. And I suspect they may very well be done at our next meeting of that board. In terms of the backlog of rent reviews, I think if the committee recalls, this was a 2-part recommendation. Part A is the primary part of that, which was done, and Part B, which was just around some internal procedures within the team, still needed doing. But that was the less important part in terms of managing that backlog of rent reviews. That was the bit that was done, and we're coming up to date now. So hence why largely implemented. And members will also recall we did a formal follow-up of all the council's high priority recommendations during the course of the year, an evidence-based one. I hope that's answered the question, Councillor Ward.
Councillor Chris Lucas.
Thank you very much for your explanation there. My question, I suppose, it's with my teacher's hat on, having sat through a number of Ofsted and read a number of Ofsted reports, these adjectives that describe how good or bad a school or college is the thing that most people hang on. And the term reasonable assurance is, I suppose, okay. If something's reasonable, it's pretty good. But how does that stack up? Is there like an Ofsted report where there's different levels of adjectives to describe the current state of affairs? And if so, where does reasonable fit in that rank? I'm guessing it's not at the top. And if it's not at the top, what would it take to become at the top? What would the council have to do to become whatever that adjective is that is above reasonable? What would it take to reach that to become that adjective?
Thank you. I'm somewhere in the report. There's a table which sets out those definitions. Yep. So I was going to use the table to illustrate the point. Appendix B. So reasonable's good. It's it's a good thing. I'd call it in the positive if you the substantial and reasonable are the positive categories, and limited and no assurance are in the negative categories. There are very few local authorities in the no assurance category, although those who are essentially in government special measures might find themselves in that category. But reasonable, how would you get up to, so where do I want to start with this? I think let me start with a bit like Ofsted. They publish their ratings and they publish the criteria, and we have used CIPFA's criteria, Chartered Institute of Public Financial Accountants. They're not laid down, but they are fairly consistent and many authorities use them. Some authorities don't use a system at all because the standards only require that I give you a conclusion, and I could use words like good and bad. So, but we've chosen to use CIPFA's to at least give us some kind of structure. How would you get to substantial? You'd probably have to have just about every audit in that audit plan come up substantial. So every individual audit gets an audit opinion. And if they all came up substantial, I'd probably have to give North Arts substantial. And you would also probably look at me, given your knowledge of local government and authorities, and go, really? Because outside of, I don't even think some of the supposed high-performing authorities like London, London Borough of Westminster, for example, I don't know that they'd even have substantial. You would have to have a full complement of staff everywhere, no vacancies, every control and procedure working, all your governance working, and just nothing fraying at the edges at all. And I'm not aware of anyone, as I say, certainly post-COVID, who in any local authority who could probably say they are substantial. So you'd be reasonable as a good place to be, I think. It's the same as me telling you earlier, generally conforms with the standards for an audit service is a good place to be, because very few will be fully compliant. I'm hoping that's answered your question, but
Thanks, Chris. And to Chris, page 52 of the pack, you've got that table, and it's quite good because we got from the percentage of reports for 25-26, as Paul was just alluding to, 29% substantial and 37 reasonable. So overall, we're 66% doing good, and others are the unqualified and the not complete. So we're in a good place overall, I'd like to think. Other questions from the committee for Chris on that? Anyone want to ask about the audit charter? No? It's a riveting read. It's a riveting read. As I keep telling Chris every time I do go through all the stuff that comes to us. I mean, for the new members, a lot of the changes that were going into that charter we did last year to bring them up to code, and the returning members will remember that. So you don't need to go back and read it unless you are really trying to do so. No, in which case, the recommendation, thank you, Chris, for the updates and the answers to the questions. The recommendations are 2.1, that the committee note the annual assurance statement and the internal audit annual report. 2.2, that we note the results of the self-assessment required by the Global Internal Audit Standards and the Quality Assurance and Improvement Programme. 2.3, that we approve the internal audit charter for 26-27, and 2.4, we already have, but we seek the management assurance that the scope and resources for internal audit were not subject to inappropriate limitations in 25-26. I'm happy to propose that. Can I have a seconder for that, please? Councillor Willoughby, thank you. Any debate on that? We have no debate. Just thank Chris for, as always, for providing us with the report and for the presentation of the report and the updates. And yeah, it's, as we heard earlier, it's all moving in the right directions and looking pretty positive all round. So thanks for that. Can we go to the vote then, please?
Thank you, Chair. That's carried unanimously.
Thank you. It's also probably a good point to mention 10th of July. Some of you should have the emails from Chris on that. I don't know if that's gone to the new members yet, potentially, but we can update that. Chris, do you want to tell us about 10th of July. There we go.
Yes, I forwarded the invitation to Councillor Willoughby and Councillor Lucas probably this week, I think. The meeting on the 10th of July is within the requirements of the new Global Internal Audit Standards as applied to UK local government. It's important that I meet as Head of Internal Audit with the whole of the Audit Committee in private. And that just gives us the opportunity to talk about anything to do with our work, anything you want to know about the Shared Internal Audit Service, anything we or you want to talk to us about, etc. But it's about giving the committee that opportunity to do so, and it's in addition to the meetings I have with you as the chair and Councillor Sarah Lucas as the vice chair, which are separate meetings again for the same opportunity. 2 p.m. 10th of July.
Yeah.
Friday.
Friday. It's Friday. Yeah. Councillor Brown.
Can I just ask, what's the attendance requirement there? Do you have to have a certain proportion of the committee in attendance at that meeting, or what are the requirements?
It's not an official meeting of the council, so no, if you can't make it, it's about having the opportunity to talk to me, and for us to engage the relationship between the head of internal audit and the FAR committee here at North Herts, or an audit committee more generally, is to ensure that we work together and we talk to one another and understand the authority through the lens of internal audit. So,
Okay.
but there's no compulsory or mandatory attendance in that sense.
I will be there, but I just wanted to know whether there was a quorum or not.
Yeah.
As we heard, just to make sure we've all got that independent access to advice and comments from Chris. Brilliant. Thanks so much, Chris. In which case, moving on to item 8 on the agenda. This is the draft annual governance statement for 24-25 and an action plan for 25-26. Yeah. Ellie Hollingsworth and Ruben, are you to present?
Thank you, Chair. Just to be clear, the draft statement is for 25-26 and the action plans for 26-27.
And then the action plan for 26-27 is what it should be.
Thank you, Chair, and good evening, committee members. This report asks for the committee to review the draft annual governance statement for 25-26 and then the action plan for 26-27. I'm going to provide an introduction to it, and then Ellie's going to go through the self-assessment and the statement itself. So the annual government statement is based on the local code that we brought to the committee in March. Following the new format of the local code, the AGS this year is a lot shorter, as the standard governance arrangements were laid out in the code. So they cover the specific governance arrangements, policies and procedures that North Herts has in place at the moment to demonstrate its compliance with those 7 principles. It makes sure that public money is safeguarded properly, accounted for effectively and efficiently, and that all the business that we do in the council is conducted in accordance with law and proper standards. So the AGS then talks about the effectiveness of those arrangements we have at the council and how they work in practice. It is a legal requirement on our part to do this on an annual basis. And this report provides the committee with the opportunity to comment on the version ahead of the final version, which we brought at the same time as and when the statement of accounts is ready for 25-26. As external scrutiny on this, the Shared Internal Audit Service, SAFS, the Shared Anti-Fraud Service, and KPMG have also had copies of this, and we've incorporated their comments where necessary and relevant. So that's the introduction, and I'm going to ask Ellie to cover Appendix A. Thank you.
Yeah, so the self-assessment for this year showed no significant governance issues. As Ruben said, in line with the new format of the local code, the self-assessment is shorter in length and makes the areas for improvement easier to see. So they're at the bottom of each sub-principle. The self-assessment document will be uploaded to the governance webpage of the council's website after this meeting. And the improvement areas directly relate to the actions in the action plan at the end of the annual governance statement at Appendix A. So the AGS with the new format follows a more readable, clear and transparent sort of format and gives the governance processes and procedures that the council has in place. So the actions in the action plan were agreed with the leadership team as well as the chief executive and the leader. And these are to address the key areas of improvement and governance challenges identified for this period. So the actions in the plan on page 106 of your pack, I'm just going to run through those briefly. So these cover a process for civil parking enforcement annual reports, an update to the fraud prevention policy, implementing the green procurement checklist, developing a public reporting process for the sustainability strategy, a review of the equality strategy objectives, providing guidance and training on completing environmental and equality impact assessments, producing a short project management guide for staff to follow, ensuring all staff are receiving regular one-to-ones, including manager training, monitoring completion of regular performance reviews, developing plans for engagement of residents via the Churchgate online platform, and developing annual reporting for committee, cabinet subcommittee on all of the council's companies, continuing to provide training and guidance to staff and councillors on cybersecurity and to run cybersecurity exercises, as well as running financial training sessions for service managers ahead of LGR. And lastly, reviewing the protocol for recording of council meetings and completing the SIAS health and safety audit and implementing resulting recommendations. So from last year's action plan, we've just got a continuation of the cybersecurity action and a development of the action around equality and environmental impact assessments. So focusing on the training of officers on the process. Other than that, all of the actions are new for this year. So as in previous years, as the plan covers 2026 to 2027, and as this year has already begun, we will begin actioning the action plan rather than waiting, just to get it underway as soon as possible. Monitoring of the actions, as you'll see from the action plan, sits with each directorate, and some actions are assigned to directors and some to specific teams. And progress on the actions will be reported to FAR with the final version of the AGS. Thank you.
Questions on that? Councillor Chris Lucas.
Thank you very much indeed for that, both. My question related to the action plan. It's great that you've identified that there's certain things that need to be looked at in a bit more detail. What appears to be missing for me, or maybe it's somewhere that more experienced members would be able to find more readily, is the metrics or KPIs and timelines that go with these with the action plans. I'm particularly looking at action number 10, which was develop further plans for engagement of residents via the online Churchgate Hub enterprise. When are we going to expect that to be implemented? You mentioned just in conclusion that some of these sits with the various directors, service directors, but I think it would be really important to accompany any action plan, the timelines and KPIs and what success looks like.
In regard to Churchgate, particularly, that is in the council delivery plan, so there are timelines and KPIs there. I absolutely accept your point about the others, and then we'll be working with the leadership team to get those timelines in place. But we are talking about this financial year, so when we come back with the progress on the action plan later in this year, we'll develop those timelines so they're there. Absolutely accept your point, though.
Councillor Ward.
Thank you, Chair. Yeah, my question also relates to the action plan. And I went back in time a year because our IT is so good that I can go look at last year's committee papers. There were 13 actions from the similar report last year. You mentioned the cyber one that's a continuation. Can you, putting aside the specific dates that Councillor Lucas mentioned, but can you confirm that all the others have been closed?
Yes, they have. I think the last report that Georgina brought in February gave you timelines and completion rates at that time.
Councillor Dennis.
Thank you very much, Chair. I feel that local government reorganisation is going to be a bit of a broken record. Thank you for a really comprehensive report and action plan that sits nicely alongside the other documents, council delivery plans, and the reports that regularly go to scrutiny on delivery of our core projects. One of the things for me that's been missing from the risk and audit pieces that we've looked at so far tonight, and again isn't necessarily reflected here, is what happens in the event that we lose staff or we're unable to recruit staff to roles that are critical to delivering on our action plan as a result of impending LGR and the uncertainties there. Have we got a safety net in place to make sure that our key priorities from this action plan are carried through no matter what happens as we move forward to vesting day?
I might defer to the finance director on this one, but my answer would be, I think that is a conversation that is ongoing with the leadership team, and they are really, really aware of those concerns, as we all are.
Yeah, we've got a red risk, as your comments relate to the risk matrix, both resourcing and LGR, for very good reason. And both of those are to do with staffing. So moment staffing is doing okay, but we're aware of the risks that come with both of those things. I don't think we can commit to say all these actions will happen if we do suddenly lose key staff. I think that would be foolish to do so. I think we've then got to, if we do lose staff during the next year, we've got to reprioritise about what is career key. We still have a very good AGS in terms of assessment against it, even without these actions in place. So these are, in some places, the icing on the cake to make things even better. So I think it's a case of, if we need to, we'll reprioritise both this, council plan, all things need to be reprioritised if there are resourcing issues we need to address.
Other questions from the committee? No, in which case we can let. No, sorry, John, I was looking down at that one. John, please.
Am I on? It's a nice format, so thank you. Nice and clear. I just had a couple of questions. I think there's a couple of statements in here around the number of things that have happened. For example, the number of complaints against councillors, the number of freedom of information requests that were received. And those headlines are useful illustrations, but I suppose the real governance around it is in what the response was. So I wonder, on the freedom of information piece, okay, there were 820 requests. The governance piece might be in how many of those were fulfilled or declined. And if there's a way of elaborating on that in the paper, that might be informative for the readers. It's not the be all and end all. The other one, on a similar vein, Principle A references the Standards Matters report. And there's a hyperlink, which is very useful. My question, just because this goes to another committee, can you comment a little bit for today on how complaints like that are investigated? Is it an independent inquiry? Proportionately so, just so that we can take comfort that although there is a low volume of complaints and very few are upheld, they've had due attention.
I can answer the first question. So the self-assessment document, which is also still in draft, will be uploaded to the website with a lot fuller detail. So some of the detail will be in there, but we'll make sure to follow up on the bits that you've mentioned. And I'll pass the second question to you, Ruben.
Questions around how the complaints are dealt with. Yes, there is a pretty robust 3 C's policy, which are complaints, compliments, and I always forget the third one. There you are. comments. Thank you. And that will go to another committee, but absolutely that is a similar committee to this where it is aired, and there's the standards committees as well. So I feel that we could probably put some more detail in to say what that process looks like and links to those things there, which I think would be helpful.
Okay with that? Yeah. Other question, Councillor Ward?
Oh yeah, it was just really a point of clarification for John, that we looked at that in detail at overview and scrutiny last night. There's a publicly available detailed report on that if you want to go and have a look.
Thanks. Yeah, thanks for that, Paul. Any other questions? I was just looking down and looking back up just in case I missed you again, John. John, you're back up.
Thanks. Only a couple of observations, really. Principle E references the council administered a sustainable communities grant, gave some money, a substantial sum. I just wondered, is there room to think about how this is classified? Does it really belong in Principle E around developing North Hart's capacity, or would it belong in the sustainability bit, the economic benefits bit? The only other thing that occurred to me as I read it was that in terms of developing capacity and leadership potential, is it worth referencing some of the senior promotes that took place, I think, in the last year, unless my memory is playing tricks on me? I think you got a new legal monitoring officer, for example. Could that be an example to reference here in terms of capacity being built and nurtured from within? Yeah, that's it. On this one.
In order of answering that question, the Sustainable Communities Grant was UKS funded and sat with my team. So I think for me it was this is an addition to what my team does. But I accept your point. Indeed, in fact, my policy team and sustainability team worked on it as well. So I kind of took ownership for that. But it could sit in either. Absolutely, we can make a reference to it in both. But we're not fans of duplicating information across the thing. And absolutely, the monitoring officer after the restructure is my line manager. So I'm happy to flag that. Absolutely.
Questions? Any further from the committee? No? Thank you, Ellie. Thank you, Ruben. In which case, the recommendation is the committee review and comment on the draft annual governance statement and action plan at Appendix A. Can I have a proposer for that, please? Yeah. Councillor Sarah Lucas, thank you. Can I have a seconder for that, please? Councillor Brown, I will take this time. Thank you. Debate. And just to remind the committee, if you're minded to add to the recommendation, that's the whole point. You can comment on it like you were just saying on potential things to add to that or modifications that could be taken forward potentially. Councillor Brown.
Just wanted to say thank you for the report. I do agree that the format is easier to read, very clear. And I suppose the only thing that is not immediately available, although Councillor Ward found it very quickly, is the comparison with last year. So I don't know whether there's any scope for putting, particularly with the actions, a comparison with last year in an appendix or something like that. Yeah, and I particularly like the links in the report. I totally agree with you that we don't want to be duplicating information, but to provide links so you can quickly follow those and find out more detail when you want to follow. So, for example, I wanted to know more about the corporate peer action plan and how that had been completed, so followed that link. But you don't necessarily have to read everything, but you've still got the overview. So that's really helpful. So thank you very much.
Thank you. Any other comments, debate? Chris, did you want to comment on that?
Thank you. I was just going to say in response to Councillor Brown's comments, the for solace guidance, and particularly the new addendum to it, does actually require the AGS to not only look forward at next year's significant governance issues or the ones from 25, 26, but it should actually have a section in there showing the follow-up. The whole point of the AGS under the new guidance, though, is to be accessible and readable. And I was just listening to earlier comments around sort of KPIs and performance measuring the actions. The guidance does actually go on to state that it's accepted that detailed action plans around many of those governance issues will sit within the authority, and the idea is just to give the reader a sense of what your key governance issues are. So I think under the new guidance, the idea is to get the AGS simpler, more accessible, easier to read, and barring some of the discussions today, I think the North Harts one is actually very, very good. And if I had a bit more time, I would get the HCC one looking much like this one. It's certainly easier on the eye and easier for the reader to look at. So endorsing it. I did have one other comment, if I might, which I was going to raise earlier, but well, at the risk of prolonging this, we'll just say that, as I briefly mentioned, the AGS has quite a lot about internal audit in it, and the new addendum to the for solace guidance that underpins the AGS does actually create a very strong link between internal audit as a key part of your governance, and a lot of what was in my report needs to be in the AGS, which was part of my feedback, which the team have included. But I think what it's showing is, particularly for you as the FAR committee, is how a lot of these documents are joined up. And indeed, there's a section in there, usually from the external auditors as well, with information on the statement of accounts and their value for money conclusion as well usually goes in there. So it's just trying to show you how all of these link together.
Yeah, I mean, I echo the comments that we heard about the way this statement's been laid out and presented. As I say, it's really clear. It's really easy to engage with. I did a quick comparison with the 24-25 one, and it's some places just really small changes, but it's really important not to underestimate how small changes make a massive difference. And this one is super well laid out. And as I said to you all yesterday, it's really accessible. I really like this document overall. So thank you both, and to the team that's been pulling this together for us. And I'd also note principles F and G. They're a good recollection of what FAR gets throughout the year as well. So it's a pseudo track record of the reports we get during the year and how that contributes to ensuring effective governance through the council as well. So it's good to refresh your memory if you so wish, and the links there are helpful. But yeah, you know, John's point about elaboration on certain points, they're examples. So you know, each person could probably pick a few things, but I'll definitely feed that back as well when I'm talking to Cabinet on that as well. Yeah. Any other comments on that, or can we go to the vote? Let's do that. Thanks.
Chair, that motion is carried unanimously.
Brilliant. Thank you so much for that, and thanks Ellie Rubin for presenting for us and answering those questions. Which brings us to item 9, the revenue budget outturn for 25-26. Ian Keeper to present.
Thank you, Chair. I'll continue the introductions with a little bit of lesson about what these reports show. So revenue is what we spend on day-to-day running of the council. So it includes things like staff costs, payments to contractors. It also includes income as well. So generally have fees and charges. We'll come on to capital later, and capital is the money we spend on improving assets and purchasing assets in the first place, and assets are things that have a useful life for more than 1 year. So in context of this report, we're at year end, as you can see from the report. It is a bit of a constantly evolving report, this one. So the cabinet version has been updated from this one. So I will, as I go through, explain what's happened between this version and cabinet version. Reason for that is that it's obviously key that we do this alongside our final statement of accounts for the year, and we want to get the right final position that matches our statement of accounts. So there are some sort of final tweaks that go through, and some bigger tweaks as well as we do this. You'll see from the recommendations in the report, they are the cabinet version of that. So the recommendations to this committee are that you comment on the assumptions and information contained in the report in the context that cabinet agrees those recommendations. As we sort of say at the beginning of every meeting, you're a governance committee, so you're there to look at kind of what the mechanisms are that are in place to provide reassurance, not necessarily all the detail about every single financial movement in there. So in terms of the main updates, there are some little ones, but the main updates. So the biggest movement, there's a movement in the underspend. So that has decreased from 1.538 million to 1.385 million, annoyingly the same numbers but in different orders. It was not a typing error, it was an actual movement. The reason for that, of that movement, 121,000 out of the 153,000 movements, relates to the waste and street cleansing contract expenditure. So there are a couple bits missing from the FAR version of the report. So it also affects recommendation 2.3 as well. No, sorry, 2.4 in terms of transfer from earmark reserves. So in the FAR version, we haven't got all the movements to fund the waste vehicles. We happened during the year. So there's a reserve set up to fund those waste vehicles or part fund them. That movement's not in that final table. Also, we have the transition costs for the new waste contract. We deliberately made the contract so the bidders could price the upfront cost in there rather than kind of spreading that over the life of the contract. So we pay that in the first year of the contract. And the funding of that from the other waste reserve, there's two of them, isn't in the FAR version, but is in the cabinet version. And there was a slight shortfall in that reserve, which you knew about when we sort of we were the contract in terms of being able to fund that. So that will come out of the revenue budget, and that is reflected in the reduced underspend on the waste contract this year. So that's the movements in there. And that affects recommendation 2.2 in terms of that number I've always given to you. And it also affects recommendation 2.4 for cabinet, and it changes because there's two reserves moving. It's a net transfer. Let's get the number for you. It's a net transfer from reserves of 4.925 million. And that's the movement of those two, mainly the waste vehicle reserve, which is completely sort of omitted from the FAR version. So that's all the kind of bits around the detail, bits around the differences, but sort of going through the report in order, just sort of show you what it shows you. The general summary, which is the same without the cabinet changes, is an unspent against budget. And although around half of that is requested to be carried forward into the following year. So if that's approved by cabinet, that will ultimately mean that money will be spent. And the table 4 is the one that sort of does a lot of the detail in this report, and that details the change in the last quarter between the last time we brought the reports to you into cabinet and this version. And there's got a lot of detailed explanations in there against each of those movements. As detailed in paragraph 8.3 of the report, the total proposed carry forward, so we've got the additional carry forward from this report plus all the previous ones, is 1.884 million. This is relevant. We're looking at the general fund balance, we'll come on to in a minute. Paragraph 8.5 details position on carry forwards from previous years, which shows that in multiple areas where there are plans to spend money to deliver outcomes, but it's taking time. So we've got money that was planned to spend in the year before this one. It's not spent this one, so they're being carried forward again. That will be due to capacity and other dependencies. We've already talked about resourcing and how we kind of have to manage what we do when we are short on resources and have limitations on staff. Paragraph 8.4 details we did achieve all our targets for efficiencies this year. So we set efficiencies as part of the budget process, and they were all achieved, which is a good sign in terms of our future budget position. Paragraph 8.6 through to 8.8 details performance against our corporate financial health indicators, which monitor our most significant sources of income. Some updates to these, as better numbers come in as we finalise the report, is that car parking fees at the end of the year are actually 1.205 million, or an average ticket price of £1.76, which matches the previous trends from this year. We're getting a much shorter duration visits to our car parks, but more visits. So that's very good in terms of getting turnover of people in the town centres. And we probably surmise that relates to the fact that people now pay on exit. So they're kind of spending the amount of time they want to spend in the town centres, they're then going rather than kind of feeling stuck in the town centres. They pay for certain amount of parking. The year-end position on PCNs, the update to that is it was 18,991, which is a 14.4 increase on the previous year. And I believe that's due to the fact we've got more of our staff in post, which generally is the trend. The more staff we've got in post, the more people we find. It's not there's any less or better parking. It's just that we find it when we've got more staff in post. The year-end position on the general fund, as per the cabinet reports update, it was 17.9 million. And I sort of mentioned before about that 1.9 million almost a carry forward. So that gives about net position about 16 million. So when all that carry forward money spent will be about 16 million. When we set the 25-26 budget back in February 25, we were forecasting a year-end position of 14.4 million. So even with that carry forward, we've still got an increase in that general fund balance due to benefits of funding, but also underspends that are real underspends that will continually impact. Appendix 1 is provided in the end of year reports. As those who've seen the reports a number of times will know, we sort of reset the budget each quarter. So you kind of lose, it's helpful to not repeat the same thing over and over again, but you do lose that overall trend across the year. So Appendix 1 provides that detail from the original budget through to spend at the end of the year. So you can see a pattern across the whole year and where those variances have taken place. That is an introduction to the report. As with all these reports, lots of detail in there. So if you've got any questions or comments, please feel free. Yes, so the updated recommendations I'll read out to you to make sure you've got them. I mean, clearly, as I sort of said, the key bit is around the governance processes, etc. But we'll make sure we've got the right numbers in them. So the recommendations that are going to Cabinet, and I'll just focus on the ones that have changed. So 2.2, the Cabinet approves a decrease of 1.385 million. And the total at the end there is 21.400 rather than 21,247. 2.3 is unchanged, and 2.4, the net movement in reserves is 4.925 million rather than 1.798 million. And that's the primary reason for that change, that big number, is the fact that we always intend to spend the waste vehicle reserve. It just wasn't fully reflected in there because it's sort of capital, it's a revenue fund reserve funding capital. It's kind of all the bit around bringing these reports together and making sure that all three reports align across the capital, treasury, and revenue budgets. And I'll come across some more stuff later on about where stuff doesn't quite align, but it's there or thereabouts.
Okay. Questions? I'll take Councillor Ward first, please.
Thank you. It sounds like from your update, Ian, the table is going to get updated anyway, but it's just the financial health indicators on page 121. Just wanted to check some of the, I think it's highlighted in yellow in mine. Some of the numbers didn't seem to add up, like the car parking fees. It says it was plus 5%, but then clearly the numbers are not plus 5% this year to last year. It was minus lots of percent, but I think you said there's a different number now. And the same one on the bottom one. I mean, that's a drop, and it's reported as a plus 21%. So is that table just going to get corrected and updated for the cabinet version then?
Yeah, so apologies. Yeah, the numbers in yellow haven't been updated. We update the performance in 24-25. So it's the end of year performance at 24-25. But the numbers that are in yellow would have been the quarter 3 position. So we haven't updated that to the end of year position. We have now, for the cabinet version, got the updated against all of those. So just to clarify, the end of year position across all of those, so you've got them all for the record. So the garden waste is unchanged, as you expect. Most people don't sign up at the end of the year. They sign up for previous year during the summer, so that's still 32,706. at end of year, and that is a drop compared to the previous year, but still within budget. So we didn't budget an increase, we just budgeted what the level was. And car parking fees at end of year was 1.204, just under 1.205 million in terms of the income, an average ticket price of £1.76. As I sort of said, the income's gone up, so about 4.6% up on previous year, but the average ticket price has gone down. And as our prices per hour have gone up, it must mean that people are staying in the car parks a little bit less time. Yeah, more throughput in the car parks, and PCN's end of year position was 18,991, an increase of 14.4% on the previous year.
Councillor Chris Lickers.
Thank you very much, Chair. And I can't believe I'm saying this with my other hat on at the county council, but I'm just looking at those underspends on page 109 in section 8.1. I'm just wondering, I mean, and I appreciate the summary in the section following on page 110 and so on of the summary and the commentary of the reasons why there's underspends, but I'm wondering if that represents, by my math, 70% of the budget was not spent, and I'm just wondering, could that, if that money were spent, could it have been spent on ways to improve other services across the council? Because for me, I appreciate there's some big one-off ad hoc spends in underspends in environment and in regulatory, but it suggests to me that perhaps that money could have been spent elsewhere in the organisation to improve services or value for money.
I think in a lot of cases we've got underspends on staffing, and that's through difficulty recruiting into those posts. And we are trying to, and we are making progress on recruitment. So we are getting more and more traction with getting people into post. And the same issue would probably exist if we try to recruit into different posts. There's still be difficulty recruiting to them. So I get the point around, if we've got underspends, it's not a good thing. We want to be delivering all our services and delivering all the outcomes. So some of the carry forwards are around projects that aren't being done. We'd like to be getting the projects done. So yeah, I get the point. The aspiration is there to do them all. It's just that capacity side of it. So we continue to work on that. We've got a people strategy which we've kind of developed a new version of to take us through to, you guessed it, 31st March 2028. So yeah, we've got a new people strategy we're looking at the moment, and that is going to continue our work to try and make sure we've got people we need in the right places to be able to deliver what we want to deliver.
Yeah, thank you very much. Because obviously, I know it's hard. You can't just magic people into the organisation if they don't want to come for whatever reason. But I just want to make sure that the money that is being earmarked for various projects is spent, because obviously, clearly, it is earmarked for that particular purpose. And yeah, I take on board your point about you just can't magic people out of thin air if recruitment is the issue. But surely when budgets are set, they're set for a reason, and that is to provide the best service and value for money for our residents.
I think that's a comment, I suppose, to a question to respond to there. But yes, no, that's fine. Councillor Dennis.
Yes. Thank you, Chair. Again, looking at the detail table, obviously there are variances in there that are positive and negative in varying sums. Looking specifically at the top line on page 119 in respect of the bad debt provision, obviously that's increased for reasons that the note elaborates on. I think it's good that the level of new debt is coming down, because obviously the sooner you capture people and support them when they are facing difficulty making payments, the easier it is to deal with things. I was just wondering, in terms of the bad debt, whether there's a strategy in place to manage that aged and aging debt moving forward, so that the variance in future outturn reports will come down rather than increase.
Yes, we've now fully recommenced recovery action. So where people aren't paying their debts, we are getting to them early and making sure we kind of support them as quickly as we can to make those payments to us. There is some, it is just provision. So, there is still definite scope that people would pay those debts. There are, there's a combination of little debts in there and also bigger debts. And we will be practically chasing all of them to get them repaid. So yes, we're back on course. And therefore, we expect to have the need to record this again. And I would hope that, over time, maybe we get some of that money in and we can release that provision back out again. So put us in best position again.
Lovely, thank you. And I'm going to assume that the figure includes not just the actual debt cost, but the admin charges associated with collecting and chasing those payments.
This is sales ledger, so we wouldn't usually impose penalties for non-payment. We just try to get the debt in. So it is just, it's a percentage of the total debt as kind of a bad debt provision, but it's just the actual debt itself, not any costs on top of that.
Ooh, is that cost captured and reflected elsewhere in other budget lines? I'm assuming it's going to be relatively small and would probably be captured in lines with our normal departmental spends.
So can I clarify, you're talking about the cost of chasing debt, or you're talking about the penalty?
Cost of chasing.
Cost of chasing debt, we have a process in place that's got staffing in place for it. So the initial bit is around automated reminders and that kind of process, but then services have the budgets to kind of chase debts in terms of people, to give people a call and go, we'll stop your service if you don't pay your debt. Those kind of things are in place in terms of processes to get the money in.
Yeah, lovely. I did have another slightly more parochial point on page 113 as well, as it relates to a asset in my ward, but I think I'm going to take that offline and discuss with the with my county councillor and possibly also portfolio holders as well.
Sure.
Yeah.
Okay. Just thought you'd raise it anyway. Cool. Councillor Brown.
Yeah, so on the underspends, obviously, you're never going to get a perfect budget that completely balances. So there are going to be some under or overspends. Looking at the detail, some of those underspends are for quite positive reasons. 2 apprentices that were taken on. That I would view as positive. But there are some that are not so positive. And in that category, I would include things like project delays. And the one that sort of jumps out at me is the town centre strategy, which seems to have been on the delay list for quite a while. And it's in the budget of underspend, it seems to be increasing as well. So I wondered what plans there are. I hear what you say about recruitment, and I know that's been a problem in this area. But this has been delayed for a very long time. Is it because it's just not being prioritised, or it's not considered a priority, or is there some other reason? And what is the plan to get that finalised?
I think it's positive in terms of there has been some spend this year. I think there's been a few examples where we've had no spend against that budget and it's been covered in entirety. So the comment helps in terms of the fact that, work has happened. We have got to consultation points and the completion, I think it says in there in the autumn. So we're getting that one. I think, not much more to spend on that one, and that will be completed. So that's one of the more positive ones where there has been progress during the year, and it is a project in the area of the Place Directorate, where there's a lot of projects in there that needs to be completed and quite limited resource. So it is one that it's an aspiration to complete it, and it is almost there. But yes, it has tended to get delayed.
Okay, thank you. Well, it's as you say, at least some work is happening. The other one I wanted to raise, and I think I raised this last year, is commercial refuse. What are we doing to increase our number of customers? Because that seems to be on a downward trend year on year. And it feels like a missed opportunity. I mean, I know of quite a few businesses in my local town that don't use our commercial service. They use other commercial services. What can we do to promote that service and increase our income through it?
I think I said the last time we raised it that we were looking at getting an officer, and I need to get an update on where we are with recruiting that officer, because there was there is part of the establishment is an officer to support getting more customers in for commercial waste. So let me take that offline and try to get an answer for you on where we're up to with that.
Essentially, you're saying it comes back to a resourcing issue, which is a link to a lot of these underspends. Okay.
Yeah, in that one perspective, obviously the big service change during this year.
Yeah.
I don't know where they've got to in terms of recruiting back to that post to I think we're into more of a steady state now in the waste team. So it's now a case of let's do some of the nice things like that one rather than the fighting fires.
It just seems like a great opportunity to increase our income. Thank you.
Thanks, Councillor Ward.
Yeah, thanks. Similar vein to Ruth, but a different topic. On the one of the customers' items, IT support and maintenance expenditure, talks about the underspend. One of the impacts of that is basically on enhancing business resilience and cyber security. And there's a bunch of work that wasn't completed for infrastructure spend and people spend reasons. And a bit later in the report, page 147, talking about the majority of the business continuity work has been put on hold this year. I know we've got the risk management section later, but that starts to ring a few little alarm bells for me going, are we really doing enough on business resilience and cyber? If we're underspending, we can't get the infrastructure, we can't get the people. I think particularly in a world where generally the cyber threat profile is increasing because of attackers using things like AI now to really ramp up the attacks and things on lots of organisations, and the speed of being able to do that, and the speed of our response is becoming more critical, like patching and things like that. So I don't know the technical details, but I just feels a bit nervous that we seem to be not spending what we even said we were going to in that space. And I guess the question is, what we're doing about it.
Yeah, you might want to add that again when we get to the risk management bit. But yeah, if Ian, you want to comment on that now, or wait till
we can get that later. But
so in terms of business continuity, we did have some absence in that business continuity team, which is only 2 people. So that they're now back working again. Have been for quite some time now, but that has put things behind. But we are catching up. And one of the areas we have been catching up on is around that piece around cyber resilience. And we did do I think I mentioned it last time, around an exercise with leadership team around the initial stage of that is around looking at priorities if there was a cyber attack, and those exercises are continuing with service areas. In terms of the IT capacity, I think it mentions there around they have been doing a lot of support for the LGR, and that is around because we have got, I think, really good IT here, and it's supporting that because we want to put the new authorities in the best place for LGR IT as well by giving them our kind of expertise. So that has put some of those back, but I think from my involvement in the cyber boys, we have got very good cyber resilience, but it's one of those areas you keep investing in because you're never quite sure how to keep up with everyone else and keep up with those that are trying to do bad things to you. So I think the spend is necessary, and it says there the staff is now are now in place to be able to move that forward. So yeah, a delay I think on that one. I think it will be caught up in terms of moving that forward earlier this year.
I'm going to assume trainee solicitor is referring to Ian Albert over there, but do you want to, is that directly on that point, Ian?
It is. I think it's probably a hangover from Councillor Munster last night, maybe. I'm not sure. I mean, Council Ward makes a really important challenge, and I think, as I've said, certainly Councillor Lucas will know, the county meetings, you can never do enough on terms of cyber security, and I think that's. But I think where I have got some comfort, we've obviously agreed, or potentially Cabinet may well agree those additional IT posts for out of the LGR fund that was discussed at scrutiny last night. That will clearly be coming to Cabinet next week. But I think the other thing is where I do have some assurance. Obviously, it's unfortunate, obviously, that Chris is not here. I mean, one of the comments that Chris has made at previously at one of these meetings is that he actually regards, I think, North Herts as really very much one of the leaders across the county, both in terms either at county or at the districts and boroughs on cyber security and IT security issues. But as I say, you can never be complacent. Absolutely. And probably way better than I, Paul. You can never be complacent on these issues, and so we always need to do and look to see where we can do more. But I think we are in a good place, but you just have to keep doing it, and I think what we've got in place, I think we'll do that. But as I say, it's never enough, as we've seen that with other councils and local authorities across the country that have had their systems hacked.
Brilliant, thanks, Ian. Chris. Yeah, okay, I'll take you first. I was going to get John first, but okay.
Sorry, so am I okay? Yeah. My next question relates to page 127 of the pack. The Enterprise Directorate, I'm looking at significant revenue budget variances, and it relates to Churchgate. That seems to be an incredible amount of overspend, going from a budget set of 36k to £205,000 in a year, so generating an overspend of £169,000. My question is, how did that happen? I see the summary explanation, and it appears that the majority of the money was required to progress the project was spent on relevant consultants to be appointed. But for me, that seems an exorbitant amount of money to be overspent that wasn't foreseen at the start when the budget was being set. Could you explain how that happened in a bit more detail, please?
I think we risk going back over the top overview and scrutiny last night if we go into too much detail on this. So there has been project management requirements to progress the Churchgate, which the budget was agreed for, and there has been increased spend with consultants. That has been for a variety of reasons. It is to try and get to a point where we have a viable scheme to take to the market, and there are a number of challenges there. We're fully aware through project board, and as we discussed over in Seaton last night, the cost of getting it wrong in terms of getting the wrong outcome on a capital project that's going to be the size of Churchgate is going to cost us many hundreds of thousands a year, possibly, if we get it wrong. So it's important that we get the situation right now and take the right things to the market with the right options. So that's some of the reasons for it. And I don't know if Councillor Albert wants to add to that.
Yeah, I'm happy to do so. Thanks, Chair. I think just importantly, just to remind colleagues here, is that I think we said certainly at both of the last two budget meetings that I envisage that we may well need to spend some additional money on Churchgate, but it was no point, in my view, just putting an arbitrary sum of money in the budget for this. Our reserves are in good shape. It was a much better process, I think, actually, to go through both the sort of scrutiny and going through the cabinet decision-making process when we actually knew the kind of things that we need and the expertise that we needed to bring in. And as I say, clearly that was very much kind of the subject that will come to cabinet and to full council next month, about that additional expertise and an additional stage that we believe that is necessary in order to get the Churchgate project right, because that's why projects in the past, and indeed the Churchgate project itself has failed in the past, about doing sufficient due diligence and making sure that there is a viable scheme there. So for me, I mean, I entirely take Chris's point, is that in an ideal world you set a budget a full budget at the start of the year, and you work within that. But I think we've always known that actually within the Churchgate project, and as we were going through stage by stage, we would need to find some additional funding. We have the reserves that are able to do that, and clearly we obviously have that decision making and scrutiny process that actually looks at those decisions, whether it's at FAR or at scrutiny itself or cabinet, and indeed to full council, where we are requesting some additional funding to fund additional stages of work where we may need external expertise to do that. And I think it is really important. And I think as someone, I said last night, the importance of making sure we have got experts and we have experts in the room to advise us. That I think is really important. So I think there's always, and it's right always to challenge where we put down consultancy as there, but actually what we are looking here is additional expertise on a complex and important project for the district, and clearly the kind of expertise that we haven't got internally, and we're never likely to have, because it's not the kind of expertise we need on a day-by-day basis. It's very much of that expertise at a particular moment. So take the point, but there clearly was a range of decision making and transparency along the way, that this is the outturn of that. But these were the subject of cabinet decisions. These could have been subjects of call-ins or indeed coming to council if it was sufficient value at the time. So there's a lot of transparency in actually where we've got to here. This is not a surprise. These were decisions that were taken a number of months ago now, that everyone knew about and were briefed upon at the various members' briefings.
Thanks, Ian. John Cannon.
Thanks. Interesting conversation on the Churchgate. I've got to say that was a really good spot in the appendix. I hadn't seen it. A thought for the future, is it worth maybe highlighting some of these bigger variances with a commentary in the front of the paper? Okay, we're focused on the paper transferring underspends into the new budget year, which makes perfect sense. Rhetorical question for thought, maybe, is it worth just pulling out some narrative from the appendix into the front of the paper on some of these bigger ticket items? That's the observation. Just to draw a link to the previous conversations around the underspends and the treatment, it makes sense to me that this paper is focused on moving underspends into a new budget year. We budget on an annual basis, so move it into a new year. Makes sense. My question really is, how confident can we be that those urgent spends will complete soon in the new year? And I'm just trying to draw a link to other questions from the councillors around the ability to deliver and conclude these things. Budget for a new year, but critically, when in the new year, how soon could these things resolve? For example, the cyber piece.
So in answer to both of those questions, the first one, it's always a balance, isn't it, about how much detail to put where? I think if you looked at that in isolation, if you looked at Appendix A, actually the 169 is one of the small numbers in that list. So if you try and summarize that as well as everything else in there, you'd end up repeating quite a lot of stuff. So this is an addition in terms of being able to sort of track it throughout the whole year. You have had the information already, and so have Cabinet in terms of the progression through the year on the under and over spends. I do take your point around how quickly will some of this be delivered. It's kind of a bit like the kind of timing on the AGS action plans around, but by when? I think when we get to Q1 and the update, then we'll be able to kind of give a bit more picture about that in terms of what we've achieved by that point, and also what's going to be achieved in that year. So I think by the time we get the next report, we'll have a better picture of that, and we can kind of play that session again.
Yeah, you probably have something similar in that vein when we get to the capital report as well. So, I'm with you on that one there. Councillor Sirilicus.
Just looking at the line item that mentions the asylum dispersal grant awarded by the Home Office. That's something I've never heard of. How far in advance do we find out that these grants are available and that we're likely to receive it? And is this something that we apply for? Do we do this on a regular basis? Or is it an ad hoc kind of grant?
So this one, we were just given it. It was given to us based on the number of asylum seekers in the district. I think it was on a quarterly basis, counting numbers over a period of time, and we got an amount per asylum seeker. And initially, it was given. I guess it was nice to have money from government, but there was kind of some very vague stipulations against it around being spent on supporting asylum seekers, when actually the statutory duties of this council and even some discretionary ones in relation to asylum seekers are quite limited. So we have taken the decision at this point that we release that money into the general fund, because we have been providing service across the district, which has included asylum seekers and included those former asylum seekers who have chosen to live here, who ended up living here. So that's why we released the general fund at this point, because it's no point in sitting in reserve that never going to be spent. So that's the kind of history of that one, as to why it's sort of now been released at this point, back into sort of general fund spending. And, you know, at some point we can say what we can do with it. But at the moment, it's better to have it in our general money rather than sort of tucked away for no useful reason in the future.
I don't need to press that.
Yeah.
My question was around whether we can anticipate something like this going forward, or whether it's so you can plan for this sort of additional grant funding.
I think in response to that one, it has now run out in terms of then we're not getting that money anymore. In terms of other grants, there's been a push by government as part of the fair funding review that there are fewer of these ad hoc specific grants, which helps with planning because we've got more grant up front. We know where we're getting it, what we're getting at the start of the year in total, but we still do get some of them. It is usually linked, we should be linked now to sort of new burdens. So where government have made legislation changes that affect us directly as a direct local authorities directly. So we should get money for those. Sometimes they are well signposted and we know they're coming, and we plan for them accordingly and kind of resource up to deliver those. Sometimes they're a bit ad hoc and a bit late, and or they just come out of the blue completely. So it is a mixture, and that's just, you know, reflects that there's a complex area, and there are quite a lot of them.
Brilliant. Other questions? I know Chris has his mic on, but he's not there. But I imagine it's a comment that we can bring into debate when we get there potentially. Thanks for that helpful questions that raised some important points. So the recommendations are that file comments on the assumptions and information both contained in the report and as advised by Ian in his presentation in the context that Cabinet agrees to the following. First, 2.1, Cabinet note the report. 2.2, Cabinet approves a decrease of 1.385 in the 25-26 net general fund expenditure, as will be identified in Section 8, or they've already got it identified in Section 8, to a total of 21.400 million. 2.3, that Cabinet approves the changes to the 26-27 general fund budget, as identified Table 4, paragraph 8.3, total of 651k increase in net expenditure, and that Cabinet recommends to Council that Council approves net transfer from the earmarked reserves as identified Table 9 of 4.295 million now. I'm proposed that. Can I have a seconder for that, please? Councillor Alistair Willoughby. Thank you. Debate, and Chris, did you want to come in at this point? If it was more a comment on Churchgate, potentially this is where you want to say it.
Apologies, Chair. Small children, sometimes they call it the most inopportune times. Right. So it was actually a comment on some of the points that Councillor Albert made, and you know, we do a similar job in different councils, and I definitely take on board his point when he says that, you know, we make these budgets with the best intentions, and sometimes we have to make some very prudent changes, often in year, to make to answer ongoing issues, and once again, I do accept the fact that these things do change, but it's the amount that it changed in year that was the most shocking, to have to find an extra £169,000 in year to fund what is essentially consultants. And once again, I do take on board Councillor Albert's point about we want to get it right, and Ian's point, want to get it right because the cost to get it wrong would be suboptimal. But I guess the question that I have is, and Councillor Albert made the point about not wanting to put an arbitrary sum, but the variance is so huge that, and Councillor Albert made the point about that this is an ongoing project, and previous administrations have been trying to grapple with this for years and years and years, and he's absolutely right. But the variance just seems so at odds that for £169,000 for a project that we've known is going to A, take a considerable length of time, and B, be very costly, to suddenly have to find an additional 169,000 in year to fund the project. That's the point and question I wanted to make.
I hear the point that you're making there. Just would reiterate one, and it is hard because when I started, I was doing the same thing, that between overview scrutiny and finance audit and risk, I mean, that is a relevant point. And again, I'm sure overview scrutiny will be able to tally with that as well. One of the questions we'd be asking is the spend of that money an appropriate means by which to actually, as we're going to see, Churchgate is a high risk item, right? We have a lot of capital high risk items. One of the questions is that spend of that money an appropriate way to potentially mitigate some of the risks that come with that project, and have the appropriate processes been followed in place to actually ensure that that spend is appropriate? That's what we're looking at potentially. And then the challenge points that you're raising, there is some there, but again, more for overview scrutiny as well, I would suggest. But I do hear the points, right? And it's one that we can, I'm sure, have a conversation about during the rest of the civic year as well, potentially. Alistair.
Thank you, Chair. I just want to very quickly come back on this because I fully understand what Councillor Lucas is saying, but part of this outturn has been funded from surplus rent income collected, and the balance remaining in the Churchgate regeneration project earmarked reserve is in the notes, which suggests that it had been identified that at some point this money would have to be spent. It just hadn't been identified specifically what it would be, but the reserve was there. So this isn't coming from the general reserve. It is coming from an earmarked reserve specifically for works like this on this project. So I think actually, to my mind, that would be what you'd expect some of those reserves to be being used for, surely.
I think someone was talking about this last night. Oh, no, it's the total budget for Churchgate. Do we know the size of this project approximately? Yeah. Do you remember what was the spend on this?
Yeah, I mean, the point I made last night, and Councillor Lucas wasn't there, was that with the investment originally when we bought it was over £4 million. So it's a significant amount of money that's been sunk in it that we're trying to protect, public money that we're trying to protect. So hence the getting the context right. There was obviously discussion about this and forward-looking funding yesterday at ONS, but some of that's in part 2, so we can't talk about that now as well. I think the point I was making last night, which is relevant here, and what you're saying is, can we just make sure, whether it's through earmark reserves or budgeting or whatever it is, that we're actually being more realistic about the total spend on a risky project, and the execution costs are risky because we don't know all the things, and we should try and do a better job at estimating whatever it is the execution spend on some of this stuff, because it feels like these things keep on coming up last couple of years, and we're just systemically underestimating what we think we need to do on it to deliver it successfully for a good financial outcome.
Any other contributions to the entirety of the report, not just Churchgate, just to make it all about Churchgate? You might get another opportunity. No. Well, in which case, let's go to the vote.
Thank you, Chair. That's carried unanimously.
Brilliant. And again, thank you for the comment, for the questions, first off. That is what we're here, and the debate. And when I go back to Cabinet, I will raise these points as being conveyed from the committee that they will concern. Obviously, Councillor Albert's here, so I'm sure he'll raise it as well himself. Don't need me to reiterate that. Which brings us to item 11 then on the agenda, which is the capital end of year review for 25-26, and also in. Before we get to item 11, let's go to item 10. It's all changed. Which is the 25-26 year-end report on risk management governance, which again we can chat about, I'm sure, but let's hear from Ian first on it.
So many great reports for me to talk about. You just can't know which one's coming next. So we bring 2 reports to this committee during the year, a mid-year one and an end-of-year one. And this one is the end of the report. So it's mainly focused on the activities in relation to risk that have happened since that mid-year report. Being the end of the year report, it also gets referred on to council, so that council get assurance over the risk management processes that are in place. I'll refer mainly to Appendix A because the cover report just sort of points you to Appendix A, which is where all the detail is. I think the first thing to note is, we discussed it a few times already, is the council delivery plan is our kind of primary risk monitoring method we have. And that report goes to Cabinet on a quarterly basis, and Overview and Scrutiny can look at it when they want to. On my to-do list for this week is that we will also be doing a note in members information bulletin each time it goes to Cabinet, just kind of give an overview to all members around what's going on in terms of those projects and what's in the council delivery plan report, which reflects what's going to Cabinet. There's been no changes or no substantive changes to the risk management framework or any of the risk management documents or to any of those kind of key bits, but there's been no changes to them. So I'm going to jump forward to table in paragraph 6.4 on page 139 of the pack, which gives you the risk matrix. So this is how we map our risks out in terms of looking at both likelihood and impact of those risks. And then in paragraph 7.1, we've got our current corporate projects and risks mapped out against that matrix. And then we've got the 2 in the top right hand corner, which I've already mentioned already, in relation to local government organisation and resourcing, both being those sort of top level red risks. And then we've got 5 more other red risks, so Churchgate and cyber risks is a score of 8, and decarbonisation of council buildings, financial sustainability, and museum collection facility with a score of 7. That was as at the year end. As I think we've discussed this in those who've been in the committee for a while, we discussed it a few times around how these risks don't tend to move around much. So the table in the following pages, starting on page 141, is there to give you some reassurance we are doing stuff about those risks. So the bits in sort of bold italics at the end of the completed mitigating actions, those are the actions that have been completed since we last reported this to you. So we have got actions going on, and we have got ongoing actions to try and address these risks, albeit that particularly some of the project risks, the risk will never completely go away until the project's completed. So it does take time for those to move around. I will then jump us forward to the detail in particularly 10 and 11, which just shows actually, it's not just about the corporate risks. It's also important to look at the lower level risks as well. So we do have a kind of comprehensive view of service risks as well. And we can always review those and bring those up to corporate risks if they're significant enough. So we look at new and also archive risks over time. So we've got 2 new risks detailed there. And then we've got 5 archive risks. The report then looks at some of the things linked to risk. So section 13 is about insurance. Insurance is an important tool in transferring risk. So for those things that have big cost to the authority, we do insure against them. And there's a summary there about where we sit with our insurance and sort of some of the changes to the cost of level of cover in relation to that. Resilience, we've already talked about tonight already in terms of cyber risk, but it's a more general risk as well. So resilience there both for cyber, but also for other things in terms of business continuity for the council, but also for emergency planning. and those things that could happen within the district, primarily due to weather usually, but other things as well can happen that will have an impact on our residents, and we need to be able to respond to those and support on that basis. And then I will then finally just touch on health and safety. As we noted at mid-year, we have transferred that across to county council to provide that service on our behalf, and that seems to be going well so far. There's some good results from that. And then there is some actions there in terms of the action plan from last year and focus against that, and some new actions for 26-27 to help us get better at managing risk. So that is the summary of that report, which is there to provide hopefully assurance that we are doing some good stuff in relation to risk.
Thanks, Ian. I see Councillor Ward is waiting with a question.
Thank you, Chair. Just really a bit of observation and question around the matrix, the risk matrix, which I like. This is just page 140. So, well, relevant whether I like it or not, but and more to the point, how things move around based on the mitigating actions. If you look through the target, current and target boxes for all of the risks we've indicated, I think there's only one that's in its target box, which is cyber. And therefore you'd expect to see a whole bunch of mitigating actions to say we're doing something about it to reduce the probability of impact or whatever on it, which is okay because a lot of those things are listed, which is good to see. I'm just wondering on financial sustainability, we've got current box is 7, target 5, but the actions really don't seem to sort of monitor some stuff. That doesn't feel like there's much positive action happening to reduce the likelihood of that. So I was just wondering if you can comment on, is there realistically anything else we can do about that? And if not, should we really just accept that its target is where it is?
So in relation to that risk, it has been reviewed since the end of the year. So it's since 1st of March we reviewed it. And yeah, that risk will be reduced in service score. That's as a factor of both the improved financial settlement and the pension costs and setting a budget on that basis. So we have got a lower risk there on that one. So in that respect, that's why there's limited actions against it, albeit that we've now got a new risk in there in terms of potentially for high inflation coming out of fuel costs, driving both inflation or fuel initially, but then more widely driving inflation on that respect. So it is one we thought we got everything in place, but there is more to do on that. In relation to what we can do about it is a case of monitoring it really, because there's not a lot we can do to influence global fuel prices, unfortunately. So it will be a monitoring piece, but clearly part of that is then around if we need to reset the budget over mid-year, probably unlikely, but certainly when we get to February 27, looking at a budget then around making sure we can then basically balance our budget again. So that might require some action to offset those costs with savings elsewhere.
Councillor Brown.
Yeah, I also wanted to ask a couple of questions about the risk matrix. So first question, which I'm sure will be very straightforward. There are a number of projects in there which are complete. Why are they still on the matrix?
This position as at the end of the year. So this is a position as at the end of 31st, 2027. So picking them out. So King George Fifth Skate Park is now complete. That is going to come off because that has now finished. Have we still got waste on there? Waste and street cleansing contract is now complete.
Yeah.
We haven't done lessons learned yet.
Okay.
So once we've done that, we'll take it off there as well.
And there's one more, isn't there? Engaging the community.
Yes, that will come off as well. That
will come off.
That will come
Yeah.
So
I mean, I
in time.
I could understand why you might keep the Western Street cleansing contract on a bit longer. Okay, that I thought that would be a very straightforward question. So they're coming off. It's just position of year end. And then I just wanted to ask about the museum collection facility because obviously it's a new risk. The other new risk is not within our control, is it? Renters' right, that's a government thing. But good that it's been identified. I just wanted to know more about this. Why has this become an increased risk? Is it due to delay or additional expenditure? I've read the contingency, but I don't quite the mitigation, but I don't quite understand it. Is it it's going to cost more than we expect and it's taking longer than we expect? Is that why it's being incorporated as a corporate risk?
It's on those corporate risk as a corporate project, so it's been adopted by Cabinet as our key project.
Right.
So therefore, it's our principle is that a corporate project come on the corporate risk matrix to keep an eye on them from the risk perspective. So that's the main reason. It's at fairly early stages in terms of defining the project, in terms of the detail of it. So I think that reflects in why there's quite a lot of action still to be taken and why it's quite a lot high risk level at the moment. But I would think that as we kind of go through the project and make some progress on it, we can probably look at how that risk would then probably come down.
Okay, it will come down. So it's not specifically that you're expecting it to go miles over budget.
No.
No. Okay, that's good to know. Thank you very much.
Councillor Lucas.
Yeah, I wanted to ask a very similar question. Surprise, surprise, on Churchgate. Is it in the high risk strategy category? Because once again, you're not expecting it to go miles over budget. Is it because of those ongoing controls and mitigation actions that you don't think that they're going to be sufficient in order to bring the project to fruition?
It's a high risk because it's going to be the biggest project we've ever done. And therefore, I think that reflects that. It is still, given the overall timescale we're looking at for a Churchgate project, still fairly early days in terms of getting to a point of actually, spade in the ground kind of progress. So I think the risk as it stands at the moment reflects the fact there's still a lot of work to do to get to a point where we're building something out. And then even once we're at that point, we've then got to complete the build and then, have the product in terms of the regeneration at the end of it. So a long way to go on it. And I think in any project like that, you have high risk attached to it.
Any follow-up? No, good. Any other questions at the moment? No. In which case, the recommendations are that Finance, Audit and Risk Committee comment on the risk management governance update as attached and Appendix A, and recommend that Cabinet refer it on to full council. I have to propose that as well. Can I get a seconder for that, please? Councillor Sarah Lucas, thank you so much. Debate. Any comments on the governance statement, risk statement? No. Again, it's a good review and it outlines and recognises a lot of the comments and the questions and the concerns that have been raised by this committee, that we do have a lot of potentially high risk but high capital investment projects coming online, and it's just good that those are recognised and we're keeping a close eye on it. That's the whole point of these committees and briefings, so it is beneficial. Which case, let's go to the vote on that, please.
Thank you, Chair. That's carried unanimously.
Thank you. Now we come to item 11, which capital end of year review 25-26, and back to Ian Cooper to present.
So capital, as I sort of previewed earlier, is our spend on purchasing and improving our assets. So those things are very useful life more than 1 year. And this is the end of year position on the capital budget. So I will jump into the report in terms of what it's showing you. So table 1 shows the kind of forecast spend against our capital budgets across the 25-26 through to this year and then beyond. And then table 2 details the variations on those schemes that have slipped. So they're looking to move the budget between years. Within the item at the top of table 2 for the public sector decarbonisation project of our leisure centres, it does also reflect a combined impact of both the slippage, but also the fact that it's been necessary to increase that budget and ask Cabinet to increase their budget for that project. The increase primarily due to delays around legal agreements from the third party side, so not our legal team, but the legal teams on the other side. Delays in getting those agreements in place, which means that essentially we're spending longer with temporary boilers in the leisure centres, and also longer with construction staff being ready to do work, but no work, getting to a point now where there's no work to do, so it delays the project, and therefore there's costs associated with that. Obviously, that's really disappointing, and we are pushing as much as we can to get those agreements sorted, because clearly we want to not have the cost, but also get our leisure centres running on electricity rather than gas. That affects both Hitchin and Letchworth. The works at Royston are now fully complete, and that is running purely on electricity now. And the gym section's open, all the good stuff. So yes, that's going well. The other elements in that table are obviously also more carry forwards of budgets who projects haven't quite completed yet, but much lower value in terms of those. And then we've got some unders and overspends detailed in table 3 of the report, which reduced the capital spend. We have got some successes. So table 8.6 is all the projects that have finished during this year. And then in table 4, in paragraph 8.7, we've got how the capital projects are funded. We have in this year moved position about where we've had spare capital receipts reserves to be able to fund our capital programme. We are now well and truly borrowing for our capital. We've had huge amounts of capital spend this year, big ones being both leisure centre decolonisation and also waste vehicles, but also many other projects as well, and the gym extension at Royston as well. So we are borrowing internally, so we are using our reserves. We're borrowing against our reserves at the moment. So that is the current position, and we had to expect to be able to do that for a bit longer, because actually our capital spend now will decrease quite a lot. That was the big year. Now we're lower in the next few years. So we do have an underlying need to borrow. So if we wanted to, we could go externally to borrow, and that is now possible to do. And at some point we'll need to do that, probably not before the 31st of March 2028, but who knows. But we do have capacity to do that. And if for some reason interest rates went down a lot, we might do that. But at the moment, interest rates, as I'll come on to in the Treasury report, are staying a lot higher than we thought they might do, due to some of the global economic situations that are contributing to that. So that is kind of what's in the report in terms of where we sit on our capital projects as at the end of the year.
Thanks. Can I just ask a question? Well, it's tied to actually the previous one on risk, but the leisure centre decarbonisation, this cables across land. I'm assuming this is referring to the council trying to negotiate easements in terms of, was that not foreseen at the outset of the project? And do we know the timeline there? Is this potentially quite a lot of money? Just that bit of it, 600k potentially. I know that's not a final figure. I don't know if you know that.
Yeah,
what's going on.
I do know a bit about it. Yes, so there are, so yes, it was partly foreseen at the start of the project, but also the exact route of cabling was not known, because that can't be done until we got the full designs about what needs to go where, and UK Power Networks telling us where cables need to go, etc. So that has come later on as to when knowing the routes of them, and at the point we knew, we did put time in there for these agreements to be in place, but the legals have just taken a long time, unfortunately, despite pressure from our legal team to try and get them resolved. It is just hugely long delays. There was time in the project for it, but unfortunately pushed to beyond the time that was allowed for it to get them sorted. We're getting more and more work in trying to get it resolved, because we're aware of the kind of cost increases coming as a result of that. But it is not directly in our control.
Yeah. Okay. Questions from the committee at all? Councillor Brown.
I was just going to ask about the MRP cost. How much do you think what sort of order of magnitude are you thinking it's going to cost us to borrow internally in the next year? Is it hundreds of thousands? Is it, what sort of order of magnitude is it?
It's in the budget, so we have budgeted for it. I was look up.
Remember what was in the budget? I do remember you did talk about it, but you weren't absolutely sure it would be needed, I think, at the budget time, the MRP provision. Or am I wrong about that?
So MRP hits the year after.
Oh, it's the year after.
So it's always a year delayed. So it's when you have the asset completed, the year after that you've completed it is when you need to start charging minimum revenue provision. So it starts the year after. So there will be a need for a charge in 26,
The next year's
27.
budget. Yes.
But there was not a need to charge it in 25, 26.
Okay, so I have remembered it right. So, and orders of magnitude, any idea?
I think it's
Hundreds of thousands.
hundreds of thousands.
Hundreds
yeah.
of thousands rather than millions.
Yes.
Yes, definitely.
It's low hundreds of thousands, but I can.
Yeah,
say
yeah.
it probably.
Okay. That was all. Thank you.
Any other questions? No. In which case, the recommendations are that file comments on the assumptions and information contained within the report in the context that Cabinet agrees 2.1. Cabinet notes the expenditure of 20.002 mil in 25-26 on capital programme, as referred to in para 8.3 of the report. 2.2, Cabinet approves the adjustments to the capital programme for 26-27 as a result of revised timeline of schemes detailed at Table 2, increasing the estimated spend by 1.950 mil. 2.3, Cabinet notes the position of the availability of capital resources as detailed in Table 4 in paragraph 8.7 and the requirement to keep the capital programme under review for affordability. 2.4, that Cabinet approves the application of 1.057 mil of capital receipts set aside toward the 25-26 capital programme as referred in para 8.7. Again, I'm happy to propose. Can I get a seconder for that? Councillor Sarah Lucas, thank you. Any debate on any element of that? No. In which case, let's go to the vote, please.
Thank you, Chair. That's carried unanimously.
Brilliant. Thank you. Just a couple more items to go. And item 12 on the agenda. This is Treasury Management End of Year Review 25-26. Councillor Ward, will you be making your usual declaration and exiting?
Thank you, Chair.
And will you be exiting?
I will
for the
exit
evening?
permanently for the evening. Yes, I've got to go and pick my daughter up. Thank you.
Thank you. This is how far rolls. I mean, do people need a break? I mean, there's only 2 more items, but if relatively quickish. Yeah, I know. I was cognizant of that, but yeah, I was cognizant of that, but I was like, shall we just push through? There's only a couple more items. So Treasury Management for Ian Cooper to present.
Right. So treasury management is how we invest our surplus cash. And the picture end of year is as it's been throughout most of the year, in that we have had decline balances. We've had high capital spend, we covered in the last report, and therefore less to invest. But interest rates have stayed higher than we thought they would do. We had obviously forecast the fact that we were going to spend a lot of money on capital, wasn't a surprise. So interest rates have stayed higher. That is partly because inflation is not coming down quite as quickly as we hoped it would do. So it does create some potential issues on the other side in terms of our costs going forward. But from this perspective, it has stayed higher, and therefore we've had more money to invest. The report covers how we look at investments. So the key bits to start with are looking at security. So that's making sure we get our money back. We invest with counterparties that are going to pay it back to us. Then we look at liquidity risk. That's making sure we invest the money when we need it, so we get it back when we need it. So looking at our cash flow going forward, making sure the counterparties are going to pay it back to us and pay it back to us unless they promise they're going to pay it back to us. That's the liquidity side. And then we look at yield, and that comes after the others. And then yield's the kind of the money we make out of investments, and then that does provide a positive contribution to our revenue budget. I will then jump from the cover report into the appendix. There's a lot of detail in there, but I will just pick out a few bits out of there. There are, I will note, some minor inconsistencies in the numbers between this report and the capital report in terms of capital spend, but they're only minor. So we'll make sure we get those corrected, but they're very small differences in respect of that. So if I jump through to page 176 of the pack, which shows our capital expenditure, the actual capital expenditure we had during the year, and then how that's impacted our need to borrow, and then what actual borrowing position is. So we could borrow lots of money to fund our capital program. We have capital finance requirement of almost of 20.5 million, but actually with situation which we only got borrowing of 305,000, which is the historic debt we've got from many years ago. We're just holding on to until it's due for repayment, which means we've got a net investment position where we're investing almost 22.3 million as at year end. I will then scoot through into where that money is being invested, and that is detailed initially in the table at the top of page 181. So as at year end, we had a small investment in banks. Most of the money was local authorities, and then some with Treasury, which is kind of the place of last resort. You know, it's the safe place to put it. They do provide investments for short periods, so overnight rates, etc. So that's where the balance has ended up. And the table that will show you kind of decline in our investments over the year as we spent the capital money, going from 45 million at the start of the year to just over 25 million at the end of the year. And then I will jump forward even further to looking at the pie chart on page 184, which shows the actual places our money is invested. We've got one investment left for a bank, Australia New Zealand Bank. That is one that was taken out before we set the new Treasury strategy in February. We will not be reinvesting in Australia New Zealand Bank because we obviously made a commitment in our Treasury strategy to only invest with those ESG type products with banks, and they're going forward. So yeah, when that drops off, that will fall off completely. But we will look at what ESG products are there with banks going forward. And then you've got the full detail of the investments in page 187. We do get in a situation at the end of the year where some councils really need some cash, which is why we get some of those crazy interest rates in that table. That is not reflective of what the traditional place is. That's short-term rates for 10 days, maybe some of those investors have been for. But yeah, paying up to 8% is not the market conditions we're going to see going forward. We're looking more like kind of high 3% as kind of an ongoing rate, and potentially just low 4% for some of the longer period investments. So yeah, don't expect those rates to come back again anytime soon. So that's research Treasury. Overall, we've made a sort of another small increase in the projected return on those investments as at year end. And this report does go to Cabinet and Council. Council are required to sort of note our position on those indicators they're required to report against. In terms of the recommendations, again, it's the Cabinet recommendation report. So again, we're asking you to comment on the assumptions and information contained in the report.
Thank you, Ian. Councillor Brown is waiting with a question.
So with those high interest rates that for a short period, are we essentially making money out of other councils that suddenly need a lot of money quickly? Is that what you were saying?
Essentially, they want the money, we've got it, and they're offering rates at that level.
That's interesting, isn't it? And the other thing I was going to ask, and I think I asked this last time, but LGR again. So Surrey County Council, I believe, is not going to be Surrey County Council for very much longer. What happens to that? Does it just go forward to the new unitaries? Because it's going to be West and East. Well, they've already elected to the shadows, West and East Surrey, haven't they?
So yeah, the Surrey will exist as a council until 31st of March 2027. So until then, we can invest with them. The shadows aren't entities the entities that we know that would do borrowing. Yes, if there's any outstanding debt or investments that we've made with those councils when they transition, it would be up to them to determine how they're going to split that between them. But they would still be liable to repay it to us.
Okay, so there's no risk to us that we're going to lose that money. No. Okay.
They wouldn't take any short-term borrowing.
Yes.
From other authorities at that point anyway. They'd look at kind of either longer-term borrowing or some way of structuring it.
Yeah. Okay. Thank you.
Any other questions? John Cannon.
Just for clarity, please, in the table of invested authorities, can you just remind me what DMO stands for, please?
So that's debt management office. That's government. So that's another word for the government investment. So we're investing with government as DMO.
See no other questions. So the recommendations that FAR comments on the assumptions and information contained in the report, and the cabinet agrees that 2.1 cabinet asked to note the position of Treasury management activity as at the end of March 26. 2.2 cabinet is asked to recommend this report to council and ask council to 1 approve the actual 25-26 prudential and treasury indicators as detailed in appendix B, and 2 note the annual treasury management review for 25-26 also at appendix B. Again, I'm happy to propose that. Can I get a seconder for that, please? Councillor Sarah Lucas. I'll come around next time. Any debate on that from anyone? Councillor Brown.
Pleased to see that we're moving away from organisations that don't meet our ESG obligations. That's very pleasing. Thank you.
Yes, it's great that we were able to, and the team was able to implement the responsible investment motion from full council very quickly. And it's great that we managed to make some good, unexpected but good returns on those investments as well, which hopefully will give us more for our financial sustainability going forward. Let's go to the vote then, shall we?
Thank you, Chair. That's carried unanimously.
Brilliant. Thanks all. Nearly there. Agenda item 13, Finance, Audit and Risk Committee Annual Report for 25-26. Ian Cooper to present.
Thank you, Chair. So every year we report to Council as Finance, Audit and Risk Committee on the work that has been done during the year and what we've got planned for the coming year. We've got a introduction from our new chair, which also reflects on the fact we had 2 chairs during the last year, and reflects on the fact that we have had some kind of changes to committee from last year into this year. And then we go into looking at what the overall the committee is, and then it's in our effectiveness. So we have generally moved away from the SIRS reviews of effectiveness. We had the last one 24-25. We've now picked up all the actions pretty much against those. So that's a good place to be. But there is still a encouragement from CIPFAS, the Chartered Institute of Public Finance Accountancy, that audit committees should consider their effectiveness and just in self-reflection. And I appreciate, given it's almost 10 o'clock, you're not going to be the best place to do this, but I have put some points there in yellow to encourage you to think about that self-reflection on the committee. And that's obviously easier for those that were members of the committee last year than the newer ones, but still, that is in there. And I would encourage you to think about that, because it would be really good for the council report to be able to put some more comments in there around stuff that's gone well and stuff we can improve on. And then we've got sort of the detail about the reports you've had during the year and some of the achievements in relation to that. In previous years, we've included a kind of a table of reports coming in the following year, but actually, when I was doing that, I realised actually the structure of reports coming this year will be pretty much the same as last year. So that annual cycle we go through as a committee. So the table in page 198 is probably true for both for last year and for this year in terms of timing of things. Because actually statement of accounts now is, whilst it's going to move slightly forward each year in terms of dates, it's not move forward very much each year. So everything else is kind of that kind of picture about those regular reports and then some annual stuff as well. We will be picking up on the updates to the anti-fraud strategy during the year and the policy there as well. So there's some work that we do know is coming up in relation to that, and there's probably going to be a review of the procurement rules as well. So doing some work around, are they still fit for purpose? They mostly are. There's a few more few tweaks you can make to them to kind of improve them, and that's picked up in the plan work for 26-27.
Thanks for that. As always, I'll make my usual mention of business rates retention as a training topic, and we can have those conversations at some point, help know what we've got coming in, what we get to keep from what we get coming in, and how that helps with our overall financial position. Any others there, Councillor Brown?
I was just looking at the list that Ian's put on page 196 of things to discuss. Which topics do you feel best able to contribute to and why, and which least? Personally, for me, I feel more able to comment on things like the budget and the annual governance things than I do on the audits. But that may be a personal thing because I don't know much about auditing. And I guess if you've been a councillor long enough, you've looked at quite a few budgets. I wouldn't claim to be an expert on it, but I've looked at more budgets than I have audit reports. So I personally find that easier. And in terms of training, what was the other thing I was going to say in terms of training? We've had some training, haven't we, already last year, which was helpful. So I suppose maybe something on audit, just an overview of internal, external audit and how it all works together and the cycle of it. Sort of overview of that might be useful for somebody like me, and maybe others. And I had thought of something else, but I've forgotten it, so I'll let other people speak.
Councillor Dennis?
Yes, thank you. I think I agree with Ruth on the audit point. I think having an audit 101 for councillors, not just members of this committee, but open to all councillors is potentially beneficial, just to help members get to grips with what this audit word thing actually means in the context of local government. And then I think that'll help empower everybody to be able to make stronger and more meaningful contributions across the board to support our officer team. And then sort of thinking about other things, there might be maybe space for sort of bite-sized sessions on topics within local government finance, because obviously local government finance is a massive thing. The LGA's got some excellent resources and courses on it, and I don't think it's a good use of anyone's time to try and recreate something that already exists here, but maybe taking out small things like the business rates retention work and what's coming through there, but then also jargon busting. Ruth used 3 letters that I know very well, MRP, but how many other councillors know what minimum revenue provision actually is, what it means, how it operates, how we can play with it and use it, as well as some of the risks that are coming down the line with potential changes. And then also maybe a piece of work around things like the funding settlement and what that means for us in terms of how government approaches it, the challenges of the timeline, because finance officers absolutely love finding out the details of settlements on Christmas Eve, don't you? And things like that. And then another sort of bite-sized session maybe around just broad general treasury and investment strategy in the context of local government. And again, I'll loop back to what I said at the start. I think that these are topics that all members would benefit from, not just members of this committee.
Brilliant. Thanks so much for that, Elizabeth. Any other comments on? You've still got time to contribute to the annual report. Well, that's more for Councillor Brown, since she was here last year. If she's got comments, and for Councillor Ward, if he's got any comments he wants to convey after. Yeah, I'll check in with him if he has beyond that. But yeah, no, the training things will be good. Just scheduling them is always the timing thing. But yeah, defo on board with that. Any comment on any of that? Yeah.
I completely agree with those topics. I think the key bits can be around, we were offline around that discussion around when and how, because I know you all struggle to get here a bit early for training, but obviously I don't have a captive audience, so it is a case of trying to find that timing to get that there. And yes, I'd fully agree that I think all councillors would benefit from this, but it's that engagement around all councillors find the time, and even part of this committee to kind of to get involved in it. And whilst I encourage it, it's always a tricky one.
Oh, Elizabeth.
Sorry, at the risk of us having an offline discussion potentially around training, I think the pre-council sessions are useful, but also obviously a lot of members work, and we do like to have dinner and let dogs out to the bathroom before coming to council meetings. We do have a grow zone resource as well, and I think some of this stuff could potentially lend itself to short videos. And again, reference back, do we need to reinvent the wheel to produce some of this stuff, or are there packages that we can port and add onto the system so that members can do self-directed learning rather than just relying on the conventional face-to-face or Zoom-based stuff as well? So that might be food for thought.
Fab. Any other comments? John? No? He's good. I think we kind of looped in questions and debate all in one there, potentially. So I'll take us to the recommendations. That the committee consider the annual report of finance audit and risk as attached to Appendix A, and that 2.2, the committee delegate to the director resources to make any changes to the annual report arising from discussion of this item in consultation with the chair of committee. And that finance audit and risk committee recommend to full council that the annual report be noted. I'll propose it. Elizabeth, 1 second. There you go. First one for the night and for the committee year. Can we just go to the vote on that one?
Thank you, Chair. That's carried unanimously.
And item 14, we've kind of already covered this with the previous discussion. It's the usual ending item where we talk about possible agenda items for future meetings. You can always feed it back to myself and the vice chair when you have them in due course. It's been a very good evening of questions, robust questions, discussions, debate. It's a good set up for the rest of the civic year, I feel. So I look forward to seeing everyone back at our next meeting, which is on Wednesday, the 9th of September. Good evening, everyone, and thank you all.